Well, it looks like we hit a bottom for the Honest Company, but is it really the bottom? This company has been downtrending for the last year, and many would say that the stock market still has not hit the bottom yet. So in this video, we're going to break down where this company is at in terms of its share price. I'm going to talk a little bit about some important things from their earnings call, and I'll share what I'm planning on doing with this company over the next few months. So in June of last year, this company was almost $20 a share. And since that time, this stock has tumbled and it looked like there was no coming back. But a few days ago, it looked like they finally hit a bottom. Because the moment the stock went under $3, it spiked right back up. But right now, this company has a market cap of $300 million. And with revenues roughly around the same amount, this could be one of the best risk-reward plays in the stock market. When compared to some of the other companies that I've talked about on this channel, they either have revenues significantly more than the market cap but are far away from profitability like Shift, or their revenues are under the market cap but still have great potential because of the kinds of cash flow they can produce, like Palantir and CleanSpark. But the reason why I think Honest could be one of the best risk-reward stocks in the entire market is because of good gross margins, no debt, and plenty of cash and cash equivalents. They have nearly twice the amount of cash as they do operating expenses. One thing that I have been saying since the beginning of this year is that investors are wanting to look for companies that are going to be profitable or are already profitable. Now granted, many hedge funds aren't investing in anything right now, but what happens when they start to? They're going to look for extremely undervalued companies that are going to be profitable and can withstand the pressures of a recession. And speaking of recessions, I know there are many people, including myself, that believe that we are in a recession right now. When we look at a recession, one of the largest concerns is consumer spending. Here's what I mean. When we look at a company like Amazon who reported okay earnings and had poor projections for the upcoming quarter, we can see that people are only going to want to buy things that are necessities. Walmart, which is a company that is able to track consumer spending, also had poor projections. And then there was Target. And oh my goodness, Target had horrible numbers. But this goes to show that people aren't going to buy random products right now, but they're only going to buy what they need. So if consumer spending is decreasing, then it doesn't make sense to allocate money toward companies that are not focused on need-based products. However, Honest is a good example of a company with these needs-based products. We know people are not going to stop buying diapers and wipes, and so companies that will be able to sell their products during a recession, in my opinion, are good companies to buy. So when you take into account that this company has products that people will buy year-round no matter the economic times we're in, solid gross margins, cash to get them through the year, and the fact that they are soon going to be profitable, I see this as a tremendous opportunity to buy Honest. But now let's look at their earnings report and conference call. First, the company did maintain their 2022 outlook. Now the company is projected to be flat in terms of their revenue, but honestly, I wouldn't doubt seeing them grow something like 2%. When we got news for the previous conference call about all the different partnerships that they have coming up with Walmart for their diapers and wipes, Ulta for their personal care, and GNC for their new supplements, I don't see how their revenues will remain flat. But that's just my opinion. For Walmart, they will begin getting their products online in Q3 and then in stores for Q4. Ulta is going to be getting Honest products in store during Q3 as well. And GNC will start showing their products this quarter. With all that said, I don't expect to start seeing major results until Q4, but mostly into 2023. Plus, one thing that I think people missed in their previous earnings call is that they said once they get past these headwinds, which could go into 2023, they're expecting double-digit long-term growth. So for a company who in 2023 could have accelerated growth and a possibility to be profitable, these next 2 years, I believe, will be great in terms of the Honest stock price. But it will be based on how long we remain in this bear market. One of the major things that I think is important to note is the supply chain issues for their wipes. They admitted that this has been a challenge for them and will be for some time until the supply chain issues get resolved. However, because this has been a major holdup for them and they are still projecting to have growth over the rest of the year, that gives me a whole lot of confidence going into 2023. Another thing to add on to my confidence is their continued focus on global expansion. Their new partnership with Superordinary will help with brand awareness in Asia, in particular China, which is currently the largest country in the world in terms of population. I do believe that we won't start to see the effects of this until at least 2023. But once supply chain issues begin to dissolve and the people of China go back to where they were prior to the pandemic, then we will start to see that double-digit growth that I mentioned earlier. And one other thing I would like to mention is that they're planning to maintain their cash and cash equivalents over the next 3 quarters. With the unprecedented times we're in, where we don't really know how long inflation will be high, interest rates could continue to rise, and the possibility that a recession could go on for a while, having a good amount of cash cash gives investors some room to breathe. So when you consider the solid amount of cash on the balance sheet, plus the expectation that they will achieve positive EBITDA for the second half of the year, this is going to be a good sign that the company is going to be in a healthy position for 2023, making it even more appealing for the larger funds. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. And it is a good way to be able to evaluate a company's path to profitability. And I do believe that profitability is going to be one of the key metrics for many investors going into 2023. But I hope you all enjoyed this video, and if you did, hit that like button down below. That really means a lot for me as well as this channel. Also, I would love to hear your thoughts on the Honest Company, so feel free to mention them in the comments down below. And if you're new here, hit that subscribe button. That way you're notified when new content comes out. Hope you all enjoy the rest of your week, and we'll see you in the next one.